India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, those are pictures of the victory parade here in Mumbai, and I think there was only one thing anyone and everyone could talk about, and maybe rightly so. The winners of the World Cup in Delhi, then in Mumbai, and of course, event, procession, mobbed by fans, really culminating at the Wankhede Stadium. Really a bright morning after all of the celebratory events that happened yesterday here. This is, of course, Bazaar. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning. Good morning, Nigel. And
morning.
It was like hysteria had gripped the city, right, yesterday, to see the spirit of Mumbai coming out, supporting their team. And there was one point when they were not letting the bus move, but they were letting the ambulances pass. So, that just goes to show the spirit of Mumbai. And it was really phenomenal to see.
Well, that's right. And we have seen, the men in blue with the ball in the back. Yesterday, they put on their dancing shoes.
Yeah.
They were in party mood. The dole, the steps, Virat, Rohit Sharma, I saw Surya Kumar Yadav. They were turning on the style yesterday in terms of their dance steps as well. Fantastic. Just take a look at that. What an atmosphere. Champions on the screen and, nothing better than this.
And, I just want to make one mention. So there was an image of Hardik Pandya on the field, on the pitch, right, with the trophy. I remember I'd gone to see one Mumbai Indians match when Hardik Pandya entered and he was booed really badly.
They were chanting his name yesterday.
Yesterday they were chanting his name, but on that match he was booed so badly. Yeah. So somebody wrote, right, from being booed to bowed. And it was really phenomenal to see the turnaround and the kind of support that the team got.
I still believe that one ball from Hardik Pandya, changed the course. Of course, Bumrah then followed through with a couple of wickets. But that one ball, I think, really was critical.
And credit to the man, because he was under a lot of pressure for the last few months. But he maintained his silence and he chose to speak only with the ball and with the bat. So kudos to him. These are champion players and, our boys did us proud.
Absolutely. Well, let's then move along and take a look at what the market is going to do, right? With the bat and the ball. It's every day is a T20 match nowadays. It's for the market as well because, you open and, quick 20 overs, quick couple of hours, the market more often than not moves higher. And it's been that kind of a session. So let's just begin by telling you what you need to know. You've got a very quiet global backdrop, and that's, largely because the US was out of action. You had the Independence Day holiday in the US, so no US. And so you look at other global indices, markets kind of flatlined because there's also another important data point later today. Politics will be center stage. So you have UK election results, the exit polls, which have been streaming through for the last many hours. And it looks like the Conservative Party is out, Labour is in with full form. But the point is this was largely expected. It's a complete sweep in that sense, but it's in line with expectations. You're not seeing a big reaction in UK assets. Look at the GBP or the futures there. Now, the second round of French elections will happen over the weekend. I think they're on Sunday. And there's a lot of politics, really. There is politics out of the US as well, right? So the post-debate, the debate between President Biden and ex-President Trump, which took place, and, many said, well, Biden flopped. But he's been trying to appease the Democratic constituency because there have been lots of news reports, articles, whether Biden will need to step aside, Kamala Harris will need to step in, etc., etc. But he's doing his best to appease those concerns. He's appearing in a television interview over the weekend as well on the ABC news channel. So we'll see what all of that really does, because, whatever happens to the Democratic candidate will have implications for the race itself, because, the incumbent usually always does have a lead. when you're fighting an election as compared to somebody new or somebody on the other side. Now, you have the important data point later today, the US jobs data. Remember, the commentary from Fed officials, Fed Chair Powell himself, very recently, a few days ago, is very positive in the sense that they're saying that Q1 saw lots of data surprises, but now in the second half, we are expecting disinflationary tendencies to pick up. I mean, data to show disinflation. The consensus for this month's number is 190,000 jobs being added, and September rate cut pricing could increase on a weak jobs print. The question, though, is you want a weak number, but not very weak. So a slightly weaker jobs data will be positive for stocks, risky assets basically, while a very weak number will be actually negative for stocks as well, which will show that the real economy is starting to really dramatically slow down and rate cuts are nowhere in sight. That's going to be negative. So you want weak, but not really very, very weak. So about 120, 125,000 should be good. But below that, I mean, I think you're looking at, the market maybe reacting in a negative way. So that's the big one later today. Just to circle back to levels, I mean, they don't change. I mean, the numbers change because we're looking at, what happened yesterday. For example, the Nifty opened with open higher, went up and then lost about 100 points from the day's high. We closed 100 points from the day's high. So, resistance still remains the daily upper Bollinger Band, which is at 24,427. Basically, is almost, it coincides with yesterday's high nearly. Ultimately, Nifty should get to, in the coming days and weeks, should get to its higher equality level of 24,900. And support for the Nifty comes in at the 40 hourly, which is 24,142. That's the nearest level, 150 points away from yesterday's close. And then below that, you're looking at 24,056 for the Nifty. Immediate target for the Nifty bank is 53,970. So many banking updates, right? I mean, right from, of course, the big boy HDFC Bank. I'm talking about business updates for the first quarter. And many others, which will have implication. We'll talk about this. That's the upper Bollinger Band, 53,970. On the way down, the 40 hourly is 52,691, which should act as a bit of a support level. It's about 1.5% odd away from where we left off yesterday. GIFT Nifty should come up on your screen. It's indicating a flattish to slightly lower start. Sonia.
Oh, absolutely. I think just consolidating, right, around record highs. And that's not just such a bad thing, given that we've had the kind of momentum in the last many days. So Nifty holding strong at the 24,300 mark. And there are plenty of things to watch out for as we begin a brand new day of trade in the last trading day of the week. If you look at the US markets, of course, they were shut. But now most of the US markets closed at record highs on Wednesday. And now the jobs data is due today. So that's going to be something that the street will keep on their radar. For our own markets, FIIs continue to buy in large quantities. So FIIs bought almost 2,600 crores in the cash markets yesterday. And although there was a little bit of selling by the IIs yesterday. Now, financials will be in focus. Lots of stocks have come out with their business updates, whether it's HDFC Bank, RBL Bank, UCO Bank have all released their business updates. I'm also watching out for 3 other companies that just came out with their updates right now. There's Angel One, where the business update looked pretty good for, the quarter gone by. There's Kalyan Jewelers, and you'll get a sense of, consumer demand as well. And Macrotech just came out with their business update as well. So these are a couple of stocks that we're going to look at this morning. So lots to track. But largely, I think this continues to be a buy on dips market, continues to cruise at record high levels, building onto its gains, large buying coming in from FIIs. So no problems at the moment, but last trading day of the week and lots of global data to look forward to. So let's see which way it goes.
Well, that's right. I think some kind of consolidation with a bit of a positive bias will not hurt anyone. In yesterday's trading session, you saw the FIs, they went ahead and they added long positions yet again. So close to around 15,000 contracts is what they added in yesterday's trade as well. That's close to around 7 long contracts for every 1 short position. And in fact, the long contracts now move up to around 84% and they're holding at those levels. If you pull up a chart to see week to date how the FI positions have moved, the long addition has continued. So just take a look at that. They were at around 3.5 lakh contracts. Now they're closer to around 4 lakh contracts odd. So all through this week, there's been steady long addition. And the clients, they have been short and they're steadily increasing their short positions as well. So the short contracts from around 2.6 lakh contracts, they're nearly at around 3 lakh contracts. Both of them on opposite ends of the spectrum on index futures, but on stock futures, both of them are net long. So it's going to be a stock-specific market from here on as well. The options data, I'm pulling up 2 strikes because that's giving me the broad range in terms of the near term, that 400-point range on. So 24,500 call, well, that's seen a fair bit of addition. Premium was there at around 50 rupees. And on the put side, you have the 24,200 put as well. That is fairly active, which brings us to the levels going by the options data. On the upside, the 24,550 odd, that'll be a bit of a resistance zone because of the writing we've seen at around 24,500. On the downside, since we're seeing writing at around 24,200 put, and that's been continuous, so that's why 24,100. So in the near term, this is the broad range that I'm looking at. So we'll have to keep an eye out on that front. The stock in focus is going to be HDFC Bank. Remember when that MSCI rejig news came out, which is going to take place in the month of August, the street was positioned for, on the long side. Now, in the last two sessions, we've seen that the stock has corrected closer on 4%. And you have the business update, which is looking a little bit somber. So the stock pulls back a little bit to kickstart trade. Let's see whether or not there's some buying interest, because yesterday the stock ended virtually at the low point of the day. So the street this time around is positioned for some kind of disappointment. There was some seller news that took place, 4% in two trading sessions. That's going to be the big move on today's trading session. If it can recover, then it will help the Nifty. If in fact it sells a little bit, it will continue to remain a bit of a drag.
Okay, thanks a lot, Nigel, for that. So plenty of things to look forward to as we begin a brand new day of trade. But let's kickstart by giving you some equity views coming in. Rupal Bhansali of Bernstein says that there is no valuation comfort in India PSU trade as the segment is trading at record valuations of 14 times forward PE and 2.7 times price to book, which is the highest multiple seen since 2005. She says even relative to broader markets, i.e. the BSE 500 PSU index breached an all-time high valuation in April, and since then it has been on a valuation down cycle. However, she adds relative to non-PSU, there is still some valuation advantage, and given better fundamentals and consensus not at record bullishness as for non-PSUs, some PSU names could continue to do well. However, she says within the basket, we are most concerned about industrials and financial PSUs as these sectors are trading at all-time high valuations.
Okay, so money market views here. This is Lakshmanan V of Federal Bank, who says that the US dollar index retreated to a three-week low of 105 levels. Amid softer employment figures, he says FOMC minutes showed signs of disinflation and cooling labor market, thereby increasing hopes of a Fed rate cut in September. He adds the yen saw sharp decline to near 162 levels due to policy divergence, and the euro and the pound gained during the week due to a falling dollar. He says the USD INR traded in a narrow range and expects the pair to trade between 83.3 to 83.7 in the coming sessions.
Okay, and on the bonds, Lakshmanan says the Indian government bond yields steady amidst lack of cues. He says the US yields eased after weaker economic data, bolstered bets of rate cuts. He adds the market awaits inflation prints for India and the US due next week. And he says the coming sessions could see the 10-year benchmark bond yield trade in a range of 6.95 to 7.05%.
Well, we've got plenty of stocks to track for you. Let's highlight all the stocks we'll be covering in our top 10 segment. We're looking at Punjab National Bank, RBL Bank, Poonawalla FinCorp, Mahindra Lifespaces, Macrotech Developers and Kalyan Jewellers. All of them will be reacting to positive news flow. On the flip side, HDFC Bank, Lloyd Metals, Ujjivan, SFB and ISAB. SFB, all of them will be reacting to negative news flow.
All right, well, let's get some global perspective in, and this is especially important with regards to flows. Cameron Brandt is Director of Research at EPFR Global. He's with us now to take some questions. Cameron, great to have you with us here on the program. Thank you very much for your time. Flows, Cameron, what's the latest picture for India looking like? GEM funds and India dedicated.
The picture, as it has been now for well over a year, is very positive for dedicated funds. Just closed the book on another week of inflows. For the diversified funds and what they signal about general appetite for emerging markets assets, that's less positive. We've had outflows from GEM funds now for the past 6 weeks. And investors really seem to have decided in the emerging market space that it's the large Asian markets and no others need apply. The thing that's been different since I last talked to you is that flows to dedicated China funds have started to rebound in a steady way. Prior to that, Taiwan and India dedicated funds were taking in the bulk of the money, but it's now being spread 3 and occasionally 4 ways when Korea funds have a good week.
Hey, Cameron, hi, good morning and thanks for joining in. So for dedicated India funds, do you see more money pouring in the emerging market basket? Is there a chance that, India could continue to be at the top of the pecking order?
I do. I don't know if it'll be at the top of the pecking order. There's definitely some catch up that is likely to occur with China, especially if the plenum meeting that they have in the third week of July produces some tangible stimulus measures. But everything I hear and see is that India is viewed as a long-term story, that it'll play out over a decade, this particular spurt of growth. It's there's still room, actually, I think, for the flows to India to improve. One thing we've noticed is that India equity funds domiciled in some of the major developing markets, such as Japan, the UK, and US, have seen flows take off exponentially in just the past really 12 months. So the sources of support for India, I think, are broadening and diversifying.
Hi, Cameron. Good morning and good to see you. Let's talk about a couple of other asset classes then, like gold. I think gold was seeing a lot of inflows, and then suddenly now gold has pulled back in pricing terms. I think it's down close to 4.5% from the recent peak. How are the flows to an asset class like gold that was shining, but for the time being, it's consolidated a little bit?
Right. So we've had a sort of almost counterintuitive situation with gold, which is that certainly there's a lot of interest in gold, but people aren't looking to get their exposure through mutual funds and ETFs. And we've generally seen more outflows than inflows in the gold fund groups that we track. We have seen a bit of a diminution in risk appetite just over the past 2-3 weeks. And one reflection of that was that gold funds started to see some serious money. But as a general rule, it seems that a lot of investors, if they want gold, they're looking to actually get their hands on physical gold rather than sort of use a fund as an intermediary.
Got it. Cameron, we'll leave it at that. Thanks a lot for joining in, and appreciate your time here on CNBC-TV18. That's the Director of Research at EPFR Global, talking about the way forward in terms of flows and where India is positioned. Let's slip into a quick break. Many companies have released their business updates for the quarter gone by, so we'll get you up to speed on all of that when we come back in just a bit. Welcome back to Bazaar Morning Call. Well, this morning there are plenty of stocks to look at, so let's get straight to it. Our research team is standing by with the list of top 10 stocks for the day. First up, HDFC Bank on our radar. Abhishek is here to tell us why you should be watching that one. Abhishek, morning.
Morning, Sonia. So they have given a pre-quarter business update which shows that there is growth that has declined on a sequential basis, but CASA continues to decline for them, and that's an industry phenomenon that we have seen. However, LCR has improved, and they are focusing on lowering their CD ratio, which we can see in their numbers. So deposits are down 0.03% on a sequential basis. If you take a look at the industry level, deposits are down 1.65% year to date. So they have done better than what industry trend has shown. CASA ratio has declined sharply by almost 200 basis points sequentially, 36.3% versus 38.2% in the previous quarter. We have seen money moving from CASA deposit to term deposit, and there was also the elections that had played out in various states. So there might have been some hiccups in the CASA as well. Loan growth is down about 0.8% quarter on quarter. In this, the other wholesale loan now over there, management had reiterated last time that they are not getting favorable rates, and that continues to decline and impact the overall loan growth. However, the key heartening point to see is the LCR, liquidity coverage ratio. That was a concern point, and that's improved substantially to 123% versus 115% in the previous quarter. Back to you.
Okay, all right, Abhishek. Thanks a lot for joining us and helping us out with that. But you're tracking a few more of them, I believe. It's been a busy overnight for you. Tell us more about the other companies you're tracking.
Well, Nigel, 8 lenders gave out their business update. So it was a busy, evening last night. So Punjab National Bank, a strong loan growth over there. Deposits are up 2.8% sequentially. Advances growth are at 5% quarter on quarter. So their credit deposit ratio has improved substantially to 73.4% versus 70.6% on a YY basis and 71.8% in the previous quarter. RBL Bank now, they lost out on deposits. However, they have also lost out on CASA ratio. So deposits are down 2.1% quarter on quarter, and that's higher than industry average of 1.65% that RBI has given the update. CASA ratio is at 13-quarter low of 32.5%. Advances are up 3.3%. So it looks like net interest margin may remain stable or improve on a sequential basis. Poonawalla FinCorp, a strong AUM growth over there. Disbursements are down 23.6% sequentially. That is an industry trend. Q1 does look to be on the lower side when compared to Q4. AUM growth is pretty strong at 52% YOY and about close to 8% sequentially. And they have seen improvement in their asset quality. Gross NPA ratio is below 1% and net NPA ratio is below 0.5%. Back to you.
Abhishek, if you had to pick out one winner based on the updates and one, more subdued kind of a performer, 8 there, which one would those be?
Talking about subdued, ISAF SFB, massive deterioration over there in asset quality. And if you take a winner, Punjab National Bank, because despite, seeing a slower deposit growth, their advances growth have been pretty healthy.
All right, fair enough. There you have it. Abhishek, thank you very much. We'll come back to you for more because it's not done. Well, let's go across to Sonal, who's standing by now. There's Mahindra Lifespace and Macrotech Developers who will also be in focus. Sonal, take it away.
Well, let me start with Mahindra Lifespaces. There are 2 updates here. The company has been chosen as the preferred partner for redevelopment of some residential projects. This is in Borivali in Mumbai, and the gross development value here is 1,800 crore rupees. Secondly, they've gone ahead and acquired land, 2.37 acres situated in Bengaluru, which has a development value of 0.25 million square feet with a development value of 250 crore rupees. A lot of these companies have gone ahead and bought land in Bengaluru. It was Brigade yesterday, and before that it was Godrej Properties. For Macrotech Developers, it's the Q1 update that has come out. Pre-sales are up 20% YOY, collections are up 12% on a YOY basis. Both of these numbers have declined on a sequential basis, however. They've added 3 projects in MMR and Pune, having the gross development value of 11,100 crore rupees, which is more than 50% of the full year guidance that they're given, 21,000 crore rupees. Net debt stands at 4,320 crore rupees. It is below that 0.5 times net debt to equity ratio. So that stock will be in focus as well.
Okay, all this construction in Bengaluru, right, it makes me worry, not just about the traffic, but about the erosion of green cover, right? I mean, I was just reading some statistics. 5 years ago, Bangalore had 70% green cover, and now it's less than 3%. So, I mean, it could have disastrous effects on the environment as well. Well, anyway, that's a discussion for another day. But Vivek is with us to talk about Lloyd's Metals and why you should be watching that one. Vivek, over to you.
Well, good morning. Lloyd's Metal is in focus. So the company is going ahead and doing a fundraise, and the route that they've chosen is the QIP route. So the base size of the fundraise that the company is looking to garner is close to 1,044 crore with an upsize option of raising up to 1,218 crore. The indicative issue price for this particular fundraise is at 696 rupees a share, which implies a little over 10% discount to yesterday's closing. What is the equity dilution? At the base size, it's a 3% equity dilution of the pre-issue outstanding share capital. And at the fully upsized deal option, it's a 3.5% dilution that the company will be doing. What is the company looking to raise the funds for? Number one, the company is planning to set up a 4 million tons per annum pellet plant at Maharashtra. And the other funds, or the remainder of the funds, will be used for general corporate purposes, going with the red, given the fact that it's a significant discount at which the QIP will be done.
Okay, all right. Thanks a lot for that, Vivek. Well, going back to Abhishek then, he's got a couple of more companies that he's tracking for us. Abhishek?
while rural economy is in pain, and we had highlighted that in Fin Street in May of 2024, and that continues to be seen in players engaged in rural economy, especially the lenders. Ujjivan Small Finance Bank asset quality has deteriorated, and book has been largely looked like to be managed for the quality. So deposits are up 21.9% YOY and 3.3% sequentially. Disbursals are down 20.6% on a sequential basis. Loan growth is at 1% on a quarter-on-quarter basis, but if you take a look, disbursal to AUM ratio is at a mere 5.9% when compared to 30.5% in the previous quarter. Portfolio at risk, that's increased on a sequential basis to 4.3 versus 3.5, and even the gross NPA ratio is at 2.3 versus 2.1% in the previous quarter. ESAF SFB, now that particular lender continues to see massive deterioration in their asset quality. In last 4 quarters, gross NPA in absolute value has increased by 5.2 times, and net NPA has increased by more than 5 times. So gross NPA in absolute value has increased 39% sequentially. Net NPA has increased 41% sequentially. Gross NPA ratio is at 6.6% versus 4.8% in the previous quarter, and net NPA is at 3.2% versus 2.3% in the previous quarter. Back to you.
Okay, thanks a lot for that. Well, let's go across to Mangalam now to talk about Kalyan Jewellers. Mangalam, how did it look?
Well, very good numbers coming in this time around. In fact, a Q1 update, and this is a quarter one where, there was no festive season, there was no wedding season. And despite all of that, there was a 27% growth that the company reported in the first quarter. The India business actually reported a growth of 29%. And this was also on a high base. So, 2-year CAGR would be extremely strong. This was led by same-store sales growth of around 12%. Remember, the company has been on this expansion spree with regards to its franchise-owned stores. So in the first quarter, they've also launched 13 franchise-owned company-operated stores in India. Middle East, which contributes about 15% to their revenues, that grew about 16% as well, taking the overall revenue growth to 27%. The big triggers for them now would be the upcoming festive season, Onam, as well as the wedding season, and the new showroom launches that they have. Kalyan Jewellers has been a big mover over the last couple of years and expected to continue to be in the green in today's trading session as well on the back of a strong update.
Okay, Mangalam, thanks for that. Well, let's do a quick recap then of all the top stocks we covered for you. Stocks with positive news flow. The banking names: PNB, RBL, Poonawalla FinCorp, Mahindra Life Spaces, Macrotech Developers, and Kalyan Jewellers. While stocks that will be reacting to negative news flow include HDFC Bank, Lloyd Metals, Ujjivan SFB, and ESAF SFB. Well, I've told you about all the stocks you need to track from the equity markets. So Manisha Gupta joins us to give us a quick recap of what's going on in the commodity markets. Hey, Manisha, good morning.
Morning, Nigel. Thank you for that. Well, this is a week that has headed strong for many of the commodities as well. Well, the dollar index almost fell below 105. The U.S. Treasury yields have seen a decline as well, and that is supportive of many commodity prices gaining. So when you look at metals as a sector, we're looking at multi-month highs for many of them. Tin is trading at a 1-month highs. You have platinum at 1-month highs. Iron ore prices at a 1-month highs as well. Copper is trading at a 2-week high. So is zinc and aluminum for that matter. So we have seen strong gains come back in the case of this week. Well, the China plenum meeting happens in this month. And ahead of that, there could be some stimulus measures coming in. Also, all of U.S. data that we have seen, whether it is services activity, jobless claims, have come in on a bearish side. And that makes for a strong case for a rate cut in this current quarter itself. So that is what the markets are working with. Not just metals, crude oil prices also are trading at a 2-month highs, headed for a 4th weekly gain, and crude prices also are up by 3% this week. So a strong week across commodities.
Manisha, thanks very much for that. We'll take a break here. We'll have Nishal Maheshwari talking to us about various stocks and what you need to watch out for when we return. That's on the other side. Stay tuned. Okay, welcome back. Let's put the spotlight on the consumer durables and EMS names as we begin this particular trading session. EMS of companies, of course, need no real introduction in that sense. That stocks like Dixon, there's been the clear cheerleader in that space, but everything else has done so well. And consumer durable stocks have also started to perform after a sort of strong summer season, especially AC companies, Voltas and the like. So what from here? That's the question. And we have analysts joining us from BNP Paribas. Niransh Jain is India analyst for these sectors at BNP. Niransh, great to have you with us here. Thank you for your time. Prashant this side. And you guys have initiated coverage on these two spaces recently. I want to just start with the EMS space. As your note itself says, in your interaction with investors when you were sort of pitching these ideas, people like names like Dixon. No problem. We had Dixon management with us. We had a pretty extensive interview a few days ago. But the challenge is to find an attractive, reasonable entry point. So how do you solve for that problem, Niransh?
Yeah, hi Prashant. Thank you for having me on the show. So, see, I agree. I mean, these stocks have seen a sharp rally, been up like 30-40% over the past 1 month itself. So from here, I mean, we believe that while valuations do remain a concern, that is for the sector as well as for the broader markets. I believe that the way to look at is whether the earnings growth momentum continues. And what we believe is that based on the order books that these companies have, the recent announcements, acquisitions, tie-ups, as well as the strong order books from the existing customers, it gives us confidence of the strong earnings growth, at least for next 2 to 3 years. And while valuations do remain a concern and the near-term consolidation cannot be ruled out, I believe that the valuations might likely sustain if these growth momentum continues.
So talking specifically, Niransh, about stocks, right? Dixon Tech has really been the star of the pack here, but it's what, a 50% gain in 1 month on Dixon Tech. Now, are you trying to say that despite really steep valuations, there is a lot of juice left in stocks like this? Because it seems like we are in the mature stage of a rally here. But your thoughts?
Right. So as I mentioned, Sonia, I mean, there is no doubt that these stocks have seen a significant rally, and it really concerns investors as well. But I would like to repeat that there is a strong earnings momentum that is expected on the back of it. I mean, looking at just from the mobile segment, the company has really strengthened its position by having large customer wins and then recent acquisitions with iSmart2, as well as the strong order books from the existing customers. And then the company is also likely to be a beneficiary from the other PLI schemes for IT hardware and telecom. So momentum clearly looks in its favor right now. And I completely agree that after such a sharp rally, we don't know how much juice is still left, and the near-term consolidation cannot be ruled out. But we will have to watch out for the growth momentum and the expectations. If it continues, I think the valuations are likely to sustain.
All right. Hi, Niransh. Good morning. So Dixon, that's the big stock and that's what everyone has its eye on. But, a couple of other smaller names like a Keynes or maybe a PG Electroplast that we get the management, on the channel, and they give out guidance and they've been going ahead and achieving that. Part of the street believes that both these two could be ripe for a re-rating. What's your take? Dixon is top of the pack, but what about a couple of these other names? Could they be in for a bit of a re-rating?
Hi, Nigel. Good morning. So I believe even for the other companies, as you mentioned, specifically like Keynes, I think the near-term growth momentum is strong for these stocks as well. Especially if I talk about Keynes, the core EMS business, there's a strong momentum that is expected from across all its divisions. The management has already guided for a strong growth expectations, and I believe that even in the near term, if these expectations are continued to be met by the companies, I think these stocks can definitely re-rate from here.
On Keynes, you have a slightly sort of cautious view?
Right. So, Prashant, my view has been slightly cautious as compared to the other names like Dixon, and that is primarily from a medium term perspective. As the company has announced its foray into a newer ventures of OSAT. So, our cautious view is more to do with these new ventures, because we see a risk on the execution front, as these are also dependent on the government subsidies, the timely approvals from them, as well as the company has to still acquire a large customer in this space. So I think the risk is more from a medium-term perspective, also on the margin front, as the company gets into a very high investment phase. So in the near term, I think the momentum in its core EMS business still looks strong.
Okay. And finally, I mean, last question from my end, one of the darlings of the market, Polycab. How are you feeling about that one? Of course, you know, the promoters recently sold 2% stake as well, a little bit of concerns over there. But largely in a thriving market, good business, do you see a lot more upside or are valuations a concern here?
See, I believe that for a company like Polycab, valuations do remain a concern, especially for the whole cables and wires space. But one thing that has really worked in its favor is the rising commodity prices. Like contrary to the general belief, I mean, these are the companies which are direct beneficiary of the rise in copper, aluminium. And the rally that we have seen in the first quarter, I think that is likely to benefit all these companies, as well as like the overall capex theme, especially on the power capex as well as on the renewable energy. I think these companies are beneficiary of that as well. So I think from the growth perspective, the certainty is higher on these stocks. But I agree to on the point of valuations that these stocks had seen a sharp run up in last 2 years, and from here I think the maintaining the growth will remain the key.
Final question, Niransh, before we let you go, the toss-up between Voltas as well as Whirlpool. You know, in the last 1 year, we have seen people losing hope on Voltas. They had a problem with the quality, with the margins, with the market share. Well, all of that has turned. In the last 1 year, I think the stock is up close to around 80%. What's the preference between the two?
So, Nigel, our preference is more towards Voltas being a market leader in the RAC space. Also, I'd like to highlight that this is one category which has consistently delivered mid-teens kind of a volume growth over the last decade. So there is a huge industry tailwind that is there, which is working in the favor of Voltas, and I think that is reflected in the stock as well. I mean, there had been some concerns in the past regarding the margin pressure, the rising competitive intensity, but I think just the strong volume growth has been able to deliver has been able to re-rate this stock, and we continue to prefer this stock purely from a structural perspective in terms of the AC industry potential, as well as how the company is doing in the other white goods space through its JV Voltas Beko.
Okay. Anything that you want to leave us with, anything that we missed out on where you think there could be big potential despite the kind of valuation concerns that you're seeing?
Right. So I believe that what we have seen in the manufacturing theme so far is that the government has been really successful in shifting the low value add manufacturing to India. And this has primarily been achieved through increasing the custom duties on imported finished goods, as well as rolling out the subsequent PLI schemes. So I think going ahead, once the company achieves scale, the natural progression in the EMS space is to get deeper into the value chain, get more into the components. So I think this will be an interesting space to watch out for, to like how the government comes up with new things, how the companies get more and more into the components manufacturing. So I think this will be a space to watch out for.
All right. We'll leave it there. Niransh, great to have you with us here. Appreciate you joining in with a lot of that perspective. Really appreciate it. So that is the analyst from BNP with perspective on EMS companies, but also what he makes of consumer durables and what he likes in that space. I think we have Nishal Maheshwari with us now. He's CEO, Institutional Equities Advisory, Centrum Broking. Nishal, good to have you with us here. Thanks very much for your time. Just a quick word, Nishal, on before we go any further on the business updates which we've got. HDFC Bank in particular, would you treat that as a soft update, especially on the deposit side?
Morning, Prashant. I think banking as a whole is a bit weaker than what we had expected, basically. I think on the growth front, basically on the deposit side also, and HDFC also, I think weaker than expected. So, the concern what we have is basically in some of the other banks, the credit cost seems to be now going up. And they are not guiding very strong numbers as we go ahead also in the second half of the year. So some amount of concerns have started arising in the banking sector, and we should be worried about that.
Okay, some concerns in the banking sector and we should be worried about that. Nishal, hi, good morning. I wanted your thoughts on Macrotech Developers. Just came out with a business update. Looks pretty good actually. Pre-sales growth is 20%. They've added 3 projects across MMR and Pune region. But the stock is also up about 40% in the last 6 months.
Do you see more traction here?
Sorry to morning, Sonia. Sorry, we do not cover macro tech, so difficult for me to comment there.
So, do you want to comment on the real estate sector and just a word there? I mean, anything in the space that you still like, despite the rally that we've seen?
So I think basically the bigger cycle still continues, and I think the cycle is only 3 years old. Historically, we've seen basically real estate cycles going on for maybe 5 to 6 years. So I think we are at the mid of the cycle now. We have to see whether we have passed the peak or we are still to get to the peak. The numbers don't show that we have passed the peak. The numbers are very strong across most of the metros. So I think growth still continues to be pretty strong. What I'm positive about on the real estate side is there is an expectation of rate cut. We also expect that if US starts off, possibly we'll see 1 or 2 rate cuts in India also in the current year itself. And that will once again drive the consumption from the consumers, and that will help the whole real estate sector. So if you are invested, I think continue to remain invested in real estate.
All right, Nishal, request you to stay with us. For the time being, we'll just slip into a short break. We've got a lot more to ask Nishal, so we'll come back and continue that chat. We'll also be joined by technical experts. Mitesh and Srikanth are waiting for us on the other side.
Okay, welcome back. We'll be with us here on Bazaar Morning Call. About 14 minutes to go for the pre-open session. Anuj is standing by with what he's making of things. Anuj, good morning.
Morning, Prashant. Well, it's Friday and we have Bank Nifty in focus, of course, today because of those poor quarterly updates from HDFC Bank, and that's going to weigh on the sentiment for sure. Now, keep in mind, HDFC Bank made an open high on Wednesday when we had that news of the shareholding pattern. And yesterday also it ended at day's low. So from the highs of about 1770 thereabout, it's actually seen quite a bit of correction already. And my sense is that lower level 1650, 1660, where the 20-day moving average is placed, there could be some bottom because of the MSCI factor, because eventually you'll have that $3 to $4 billion of FI buying ahead of that August revision. Having said that, on the Nifty, it looks like today finally we'll have a lower low after 8 or 9 consecutive days when the market is making higher lows. It started on June 24th, 23,350, and then 23,560, 670, 805, 23,985, and then on the next plate you will notice 23,992, 24,056, 24,207, and 24,281. By all accounts, today we are going to start slightly lower than 24,281, but still it would be a good run of about 8 or 9 days that the Nifty would have given you about 800, 900 points. The other talking point has been the FI long exposure. Now, when we started the series, we were at 82.5% longs. It's only gone up. It's gone up to almost 84%. And in terms of contracts, we are approaching 4 lakh longs. I don't think it's happened ever before that we have been at this kind of long positions. On the Nifty, the levels that I'm watching out for, first support 24,281. It looks like we'll perhaps start below that. That's yesterday's low. And then 24,115 based on the options. On the upside, the first resistance 24,401, the all-time high, and 24,500 based on the options. On the Bank Nifty, well, there's a bit of a range. It's been an untradeable index for last 2 or 3 days. The range is 52,800 to 53,350. I think you want to focus on individual stocks rather than the index. It's Friday, so the quote of the day reflects that, and that's all of us actually. If you're ever having a rough week, just remember it will eventually be Friday.
Okay, thanks a lot for that. Everyone waiting for Friday, right? Thanks, Anuj, for that. Some market and some life advice as always there. But let's move on. Mitesh Thakkar, Srikanth Chauhan of Kotak Securities joins us now. Gentlemen, morning to both of you. Mitesh, let me start with you. It's been, a constant Friday for the markets. I mean, new highs day after day. Do you think this is something that we can build on to? And what are the levels to watch today?
Yeah. So I think today, there could be a chance of some pullback happening. In fact, I said that once before, a few days back, and that didn't happen. But again, if you look at the hourly charts, I think, we've again reached overbought levels, and now we are trying to see some kind of, a turn from the upward trajectory to a downward trajectory. So once the indicator starts to cool off, there's a good chance that price will also cool off and some pullback and some consolidation will happen. I don't expect a big decline, but yes, pause or break, I think for the next 1 or 2 days could be very likely. The level to watch on the downside is 24,150, 24,100 zone. I think if that doesn't get taken out, I think there's no threat to the up move, and this decline could be a good buying opportunity. Though on stock specific basis, I think the mid caps as well as the other sectoral rotation stocks which are coming into some kind of focus. The activity is so strong that we are still trading with long bias, despite the fact that I believe that index might still might have a cool off in the next couple of days.
Okay, all right, got that. Some bit of a cool off is Mitesh's call. Let's get in Srikanth as well into the conversation. Hi, Srikanth. Good morning. What about you?
Good morning, Nigel. Good morning, everyone. Well, for Nifty, we are of the view that it is going to remain in a range, and the basic strategy should be to look for buying if there is any correction in the market. Close to 24,200, 150, the market has left a bullish gap on Wednesday. So in case if we see the market is dropping to those levels, then there we should look for taking some long positions. On the higher side, 24,500 looks achievable in next few days. So buy on dip should be the strategy. And if we just go through with few stocks, then in that, I think railway stocks did really well in yesterday's trading session. And in that, the most outperforming stock was Titagar Wagon. So there we are bullish and we are expecting stock to move towards 1950 or 2000 sort of levels. Currently, it is around 1780, 85. So it's a buy at current levels with a stop loss close to 1700. And the other stock which we like is from the pharma space, because there we are seeing good amount of momentum and buying interest. In that, Lupin did really well, but we like Biocon, which is consistently moving upward, and it is now very close to its important resistance level at 365. So above that, the stock can move to the levels of 380. So Biocon is also a buy at current levels with a stop loss around 350.
Okay, Mitesh, what about you?
As I said, I have buy calls as well, and 3 of them from the pharma side. Srikanth was discussing Biocon. I have a buy on Sun Pharma with a stop at 1535 for targets of 1610. Metropolis is a buy with a stop at 2050 for targets of 2160. And a buy on Zydus Life. Keep a stop below 1115. Look for targets of 1190. And apart from that, I have a buy on Bata, which had a very strong delivery volumes, I think, on Monday, and then spent the next 2-3 days, giving a pullback. This should possibly move up to about levels of 1555 to begin with, and buy here with a stop at 1490.
Just 2 more names, Mitesh, if you will. One is, and again, both have been rockets. Mazgaon, which is already up, I think 300% this. No, sorry, that is Cochin, but this also would be up 100% at least this year. So Mazgaon, Cochin, and Garden Reach shipbuilders. All 3 are shipbuilders from the defense space. So your thoughts? I mean, how do you take an entry in some of these names if you want to?
We can keep debating the percentages, 200, 300. I think that's where the number lies for them. I've owned a couple of these names. I've taken very good profits on them, and I felt very good. And then I felt very sad about taking profits because the stocks continue to rally up. I think difficult to take an entry right now because especially for, a Mazgaon, which is now at 5,600, has 3 or 4 very bullish candles. Similarly, Cochin is now at 2,600 plus levels. But wait for a pullback. I think these are extremely, extremely overbought reading. So I think in the next couple of weeks, you might get those entry points, at least from a trading point of view, wherein these stocks give a pullback and the risk reward equation is again favorable.
Mitesh, by the way, did you feel what felt worse, taking profits or missing out or selling early? I'm sure it's the latter.
So I think these are part of the stock market traders' emotion game. I think you can't avoid these kind of things.
Oh yeah,
you will never be able to catch the top or the bottom.
No, absolutely, but I think it is not the money you made, but the money that you left on the table, which I think always pinches more. But you're right. I mean, it's absolutely crazy sort of moves here and very, very overbought reading. So if you're looking at these stocks with any interest, I think you should heed Mitesh's advice. We'll come back with more stock ideas with both Srikanth and Mitesh in a bit from now. Nishal Maheshwari is with us on camera. We can see you now, Nishal. Good morning again, I might add. Just a quick word on these names, Mazgaon, Garden Reach, Cochin, if you have coverage in a formal way, and what would one do with these?
fundamentally, Prashant, I think you should take out profits on all of these. There is no sense on actually, I do not understand how these kind of valuations can sustain on a fundamental basis. Yes, technically, if there is money chasing, I think there has been a few pharma funds which have got launched. Possibly they are buying into the system. But these prices, really, I think profits needs to be taken. My view remains to be across the whole defense sector, actually. I think too much is being built into it. There will be disappointment because it's largely a government-led sector. There might be some changes down the road, basically. I'm saying there's too much of positiveness on the sector. I think it's for the whole sector, one should take away profits.
Okay, that's on Masgao Doc. Well, I also had a couple of more stocks I want to ask you about. In this entire broking space, I mean, of course, the space that you've been a part of for so long, there's so many listed companies that have been doing well. There's Angel One this morning that will be in focus. I mean, the growth has been very good in client acquisitions. Now Angel One has market share of 19%. Client base is almost 2.5 crore clients. Just trying to understand that, is this a start of a structural upcycle in this industry, or do you think that it's reached some sort of a mature stage?
Sonia, every time we thought basically that there's enough volume in the market, the market just keeps on surprising you, actually. And if you really look at the penetration of equities in the market, last I saw basically was something like 7-8%. That's a kind of a number of people basically in the country which are actually having maybe bank accounts or something like the net accounts and all. So I think it's a long way to go. As we become more a larger economy, more money in the hands of people, I think people will try and find out where to invest. And I think equities historically has shown us that it is one of the best returns of the all investments. So I do not see, I think there will be some amount of lulls here and there, but I think a longer term, there should be more and more basically. More people should join basically both through the mutual fund as well as directly. So do not see much challenge on these kind of stocks.
A quick break yeah, sure. We'll come back to you in a bit. We'll take a quick break on that note. On the other side, we'll have the pre-opening rates. We'll also have Manish Raj Singhania of the Federation of Automobile Dealers Association to decode the June auto sales data and give us some trends for the next couple of months, what the demand trends look like in just a bit. Stay tuned. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. We're going to get some pre-opening action going in just a bit. But in the meantime, let's also get Chandan Taparia, derivative and technical analyst at Motilal Oswal, to give us some cues for the morning. Chandan, hi, good morning. Record highs continue, but do you see us build on to these gains at 24,300?
Good morning, Sonia. Thanks for having me. So Nifty continuing its winning weekly streak for 5th consecutive session. Post the election outcome. It has been forming high highs, high lows from last 8 consecutive trading sessions, and supports are gradually shifting higher. We have seen a rally of more than 1,000 points all the way from 23,350 to 24,400 marks. So trend is intact, supports are gradually shifting higher, and 38.2% retracement comes at 24,000. So till it holds 24,000, any small decline could be bought for an upside move towards 24,750 to 25,000. So we will continue to be with winning streak. Even the market has rallied well, but setup, liquidity and sentiment are supporting the overall bullish stance of the Indian markets. Now talking about Bank Nifty index, it made a new lifetime high of 53,357 and major trend is positive. It has been making higher tops, higher bottom on the weekly stance, given a breakout from rising channel on the major time frame. So till it holds 52,500, we are expecting the extension of the ongoing momentum till 54,000, 54,500 level. Now looking at the stock specific, positive on the selective Nifty Pharma stocks. Nifty Pharma index is scaling higher We have seen buying interest in most of the pharma name, and here we are recommending to buy on Zydus Life. Zydus has been doing well. It has been holding well above its 50-day exponential moving average from last 160 trading sessions since November 2023. It has given a highest daily close with built up of long position. Consolidation breakout is clearly visible on the daily and weekly chart. So one can buy with support of 1120 for target to 1180 zone. Second trading idea, that is buy on Cummins. Simply, it has been making higher top, higher bottom on the weekly chart. Momentum is clearly visible. So one can buy with support of 3970 for an upside target towards 4200 level. Last trading idea, that is buy on BL. We are positive on the entire defense and shipping space. Mainly the sector is roaring high, mainly buying interest in non-F&O name, including Mazgaon Dock, Cochin Shipyard, GRSE, Paras, BDL. But here we are recommending to buy on BL. The stock is holding well. Supports are clearly visible. Put writing is there. A small follow-up can lead to the next leg of rally. So one can buy BL with support of 311. And we are expecting it to extend the move towards 333 and higher zone.
Chandan, thank you very much for that. Zydus Life, I mean, I think this is the second buy sort of recommendation coming in this morning. I think with Mitesh talking about Zydus Life as well. And Chandan, of course, has got it on his list. Stock did well yesterday, by the way. Into close, it did rally a decent bit. I just want to play out some more sound bites of Ramdev Agarwal, who we had yesterday here on the program. He's, of course, chairman and co-founder of Motilal Oswal Financial Services. Well, he asked him 80,000 in the sensex. What next? He gave us a number, 160,000 in the next 5 years. Listening to that and more, I mean, we discussed a whole lot. So listening to some of this conversation, we're back.
Year after year, for 44 years, I have seen this market growing at, I didn't know that it is 16%. I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base at 15. In 5 years flat, 2029, you will be 160,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from, not from the top end of the population. Risk capital will come in a truly distributed way from across the country. And that is a revolution which is a lot of supplies coming in from existing promoters and FIs. FIs have been supplying for last 1.5 to 2 years. Now they also seem to be tired. Now it is all for the new companies which are not listed. So 100% owned unlisted company, they are coming with the IPO. Almost every day there is 1 or 2 IPOs. I think it will be a record year of maybe 200 IPOs or at least 160, 170 IPOs. Almost every other day you will close 1 IPO. And there is no season in the sense that entire 365 days it is open.
All right, well, interesting comments as always by Ramdev himself. Well, let's go back to Nishal. Nishal, final question before we let you go. Avenue Supermarts, actually, the numbers that they delivered, the quarterly update was quite good. But the stock is not cheap. Yesterday, I think it ended at the low point of the day. What's your view on the name at these prices, 4,700 rupees odd?
So we continue to have a buy on Avenue Supermarkets. Yeah, there has been some challenges basically, and I think the big challenge remains to be the dark stores and the quick service, Blinkit and Zepto and all. So I think that is the challenge basically, to see how Avenue Supermarket gets over that kind of a challenge. But till now they have been delivering well. And one very big thing about Avenue Supermarket is still what I think mostly West and South based company basically. They have yet to grow. So penetration is one big thing which they can continue to do and continue to show this, I think 15% to 20% kind of a growth for many years to come. So that's why I think execution is definitely very, very good. So that's why I'm positive on the stock.
Okay, positive on Avenue Supermarts. Got that. So at this, you're saying that at this level of 4,800 also the risk reward is favorable?
Yes, I think so. Looking at what's happening really in the market, I think this is one of the companies that is almost leader in the sector, and still with the. I mean, look, historically they are in similar valuations.
Okay, got that. Well, we'll just come back to you in a bit. We have the spotlight on the auto sector now, considering that, you know, there is the auto data that has come through for the month of June from the Federation of Automobile Dealers Association. So there was a modest growth of 0.73% is what FADA says. They also say that the extreme heat wave and delayed monsoons worsened rural sales. And in fact, extreme heat wave in northern India affected the footfalls in many dealerships as well. So Manish Raj Singhania, we have, who's the president of FADA, joins us now. Manish, thanks a lot for joining in. First, if you can just give us an overarching theme of how things are expected to move from here on. Agreed, there was hardly any growth in the month of June, largely because of the heat wave that we saw in northern India, affecting dealerships, right, and affecting retail footfalls. But what is the expectation over the next couple of months?
Yes, definitely June has affected auto retails, especially the PV segment, and we could see a degrowth of almost 6.5% there. But the two-wheeler industry grew by almost 4.5%. The expectation from coming month, July, is we are cautiously kind of optimistic. The good news is that the monsoon has covered the whole of India now, and it has done before time. So the expectation from Kharif crop is very high now, since the monsoon has been evenly spread across India, and plus the higher MSP declared by the central government on Kharif crops will result in additional flow of almost 35,000 crore in rural market. And plus the kind of new launches the OEMs are planning for the festivities, and the kind of excitement they are trying to bring around the market, all this will definitely contribute towards growth or the excitement in the rural overall auto market. The only negative thing that we foresee is the Met Department has predicted overall above normal monsoon. So there can be few states which will be kind of having flood-like situation, which will definitely result in low retails. So that's the situation that we need to avoid. So overall, we are cautiously optimistic for the month of July.
Okay, cautiously optimistic for the month of July. Got it. Manish, for the two-wheeler sector particularly, we had a conversation with Bajaj Auto a couple of days ago, and they said that they're expecting domestic two-wheeler sales growth to be 6 to 8% for this year, and which is an improvement compared to what we've seen in the last year. What is your own assessment of how July and August will pan out for two-wheelers, not just the domestic guys, rural-focused guys like Hero, but also export-focused like TVS and Bajaj?
So I think two-wheeler segment has seen a steady revival since last festival season. That is the last October, November. We are seeing a steady growth, and that clearly signifies a kind of revival in the rural market. And the growth continues in the two-wheeler segment. I think with the increase in rural segment and rural sentiments, the two-wheeler market is supposed to grow in coming seasons too. The hit that the rural market took during the COVID times or lockdowns and all that, it took time to recover. But now I should say the Bharat of India is kind of out of the blue for the rural market, and for the month of July and August, definitely we'll continue to see a growth in on a YOY basis. Also understand that last year two-wheeler market was not doing that well. So then we are seeing improved performance and improved sentiments in the rural market, which definitely contribute towards additional volumes and growth of the two-wheeler industry.
Got it. In passenger vehicles, I want to understand what's happening. I mean, overall, the sector saw a decline of 7% year on year. Some of the market leaders like Maruti are still, have their head above water. But overall, what's happening in the sector? Why is there a slowdown? And when do you see this passenger vehicle growth getting back to double digits?
So I don't see this passenger vehicle, really going into double digit now. We are on a very high note already. Decent growth in single digit would be very significant for this segment. And this segment is totally driven by SUVs now. SUVs are commanding a 53% market share. And see, we need to keep on the excitement in PV segment with new launches and new products and new price point, new discounts, new schemes. That will keep the excitement going in this segment. That would be very significant to get additional numbers or the growth in PV segment. What troubles us dealers is the high paid up stock level that are being maintained at the dealership. That has now gone up to 62 to 67 days. That's almost over 2 months of stock at the dealership. That will definitely hit the dealership profitability and will be lacking the right model to sell when the customer comes into the showroom during festival times. So I think OEMs need to be very prudent in what they build to the dealers, and we should have the right models available to sell to the customers.
Okay, Manish, thank you for joining us and giving us a quick snapshot of how the auto sector is panning out right now. But we have a market to trade, so let's get straight to it. Mitesh is joining in. Mitesh, what's the call at 9:10?
I'll go with a buy on Bata for targets of 15.55.
Okay, a buy on Bata. Got that. Angel One is definitely going to be in focus today on the back of the updates that it has come out with. For the month of, for this quarter gone by, client acquisition actually has risen 7% month on month, and big client base now. Vamakshi is joining in to tell us about Angel One. Vamakshi, over to you.
Well, absolutely a good update coming in from Angel One. When we look at the gross client acquisition, it stood at 9.4 lakh, which is an uptick of almost 7% on a month-on-month basis. And in fact, client acquisition, after declining till April, has now picked up for the second consecutive month. Client base resultantly has seen an uptick of almost 3.7% on a month-on-month basis. The average daily turnover now stands at 45.7 lakh crore for the month of June, and this is an uptick of almost 4.3% month-on-month. This too has risen for the second straight month, and this bodes well from a brokerage perspective. As far as market share is concerned, equity market share has dipped by 30 basis points month on month. There are mild gains in F&O market share, which was up nearly 10 basis points, but significant rise of almost 190 basis points in the commodity market share was witnessed in the month of June. So overall, it looks like a good update from Angel One.
Okay, thanks for that, Vamakshi. Well, let's focus on Ramco Cements, and we're focusing on it because Antique has come out with a note. Keep in mind, yesterday the stock ended at the low point of the day. Antique's gone ahead, they've downgraded the stock to hold, and they've cut their target price to 840 rupees. They are factoring in lower profitability, and that's the key reason why the target price comes down. So they've cut their estimates for the next 2 years, and they've also gone ahead and they've lowered the multiple from 13 times. Now they're willing to give it 12 times. Let's run you through four big numbers that they put out, or four big triggers that they put out. One is cement prices are at 4-year lows, and even in the past quarter they saw a sharp decline on a sequential as well as on a year-on-year basis, and they don't believe that cement prices will materially improve from here. So that's on pricing. Next, on utilization levels, particularly in South India, which is 75% of their total mix. Utilization is currently at around 65%. They don't expect it to go below 55%, but they don't expect it to go above 85% as well. So that's on the utilization front. They're also highlighting that there's been a lot of inorganic growth, or a lot of consolidation that's taken place in South India. And some of those assets were functioning at very, very low utilization levels, which will now get ramped up, which in turn could put some pressure on pricing as well as on profitability. And Ramco's profitability, well, that's going to be the key for them to re-rate from here and to deleverage their books as well. So put all this together, they've gone ahead, downgraded the stock, cut their multiple as well as cut the EPS estimates that they had.
Okay, well, that's essentially the picture which is coming through on individual names, cement in focus. But we've got a couple of seconds to go for the market opening itself. So let's take it there. With the first rates on the indices, it's negative, slightly negative, 24,242. Will we see a pullback, a meaningful but a slight drop-off, which, as Mitesh has been talking about, 60 lower now on the Nifty, 24,240 is where we are at. And the sensex is starting down about 0.25%, 220, 79,850 coming through on the sensex. Nifty Bank is down 300 points. That's about 0.6%. We're at 52,786. Market breadth is interesting. 2:1, at least in terms of how stocks are opening, and maybe that'll change. But it's 2:1 in favor of advances, even as frontline indices are opening a little soft at this point in time. But let's take it straight with stocks. Sorry.
Yes, absolutely. So we have individual stocks, right? HDFC Bank is actually down about 3%. So that's the reason you're seeing that pressure on the Bank Nifty. So HDFC Bank not taking that business update well, down about 3%. Volumes are also picking up on HDFC Bank. So that really is your top stock in focus on the downside. What's also adding a little bit of pressure on the market today is Titan, M&M, Tata Steel and Coal India. All four stocks are a tad bit in the red, 0.5% to about 1% lower. But you know, on the upside, Bajaj Auto is up about 1%, Tata Motors is up 0.5%. So autos are doing well. IT is doing well this morning. Infosys, Tech Mahindra are all in the green. Cipla, Hindalco, Wipro are also a couple of other stocks that are trending in the green right now. So it's not such a bad opening, you'd have to say. In the broader markets, I want to take stock of a couple of stocks. Macrotech Developers, let's take a look at that. Good growth in pre-sales in Q1. Pre-sales have gone up 20% and Macrotech is in the green. Angel One has seen a very strong growth in the client acquisition. Client base is now at almost 2.5 crores for Angel One. So let's get that stock as well up on the screen in a bit. That has been, it's been a little bit all over the place for Angel One the last couple of days. But I think this morning it's looking good. Kalyan Jewellers as well. Good Q1 update coming through for Kalyan Jewellers. That one also, the last time I checked, was in the green. And then RBL Bank and Ujjivan Small Finance Bank are in the red on the back of their Q1 updates. A lot of companies have come out with Q1 updates and hence those are stocks that you need to watch out for. Apart from that, Ramco Cement also in the news, so just keep an eye out on that. And we're also looking at, there's a 17% equity block deal, by the way, in Signity Tech. So just keep an eye out on that stock as well in the news at the moment. And many stocks really in the broader markets. UCO Bank is up almost 2.5%, IRDA, Inox, Wind, etc. trending in the green. So mid-caps are holding out.
Well, that's right. I think the Signity block is on the back of that Coforge acquisition. I think maybe they're getting through with that. So that could be one reason why Signity is seeing those large volumes. A few more names that are moving around. Ircon, they have bagged a 750 crore order from RVNL with their JV. The company shares that around 60%. That's one of the top volume movers in today's trading session, currently at the high point of the day. A quick word on HDFC Bank. The low of the day is 1,665 odd. This 1,650 is going to be an important mark. Yesterday, the stock was down 2.5%. Today, it's down close to around 3.5%. So put it together, it's down close to around 6% in a matter of 3 sessions. We'll have to keep an eye out on the low of the day. You'll want to track the first hour low and see whether or not there is a bit of a bounce. For the time being, the stock is at the low point of the day. A few more notable movers from the broader markets. Well, you have Kochi Shipyard. That's flying away, up close to around 5.5%. So big up move is what you're seeing out there. Inox Wind continues to move up. It's up close to around 3%. And NBCC, after yesterday's big rally, it's continuing to build on to those gains. It's up close to around 2.5%. Mazagon Dock as well, up close to 3%. These are the top volume movers. But I think those updates that came in from some of these banking names haven't been taken well. RBL Bank, Bandhan Bank, both of them are down between 2 to around 3% odd. And Castrol is taking a break. Last few days, it's been running one way. Today, it's down 1.5%. Prashant?
I think there was news flow on Shilpa Medicare, right? I think stock starting about 6% higher. And it's got decent size. Actually, volumes are not that great. But Shilpa Medicare up on your screen. Not bad, actually, for this point of the day. 200,000 shares or so are coming through. A few other names. So shipbuilders, shipbuilders are flying, literally. So 5% higher on a Cochin Shipyard once again. So it's a top volume-led gainer. And I was saying 300% in 2024 so far. If ships can fly, right? RVNL is up 4, Ircon is up 4. Just a few other PSU names here. Raymond is coming up with a 4% pop, 30-50 on Raymond. And very large volumes as compared to everything else. Ahluwalia Construction is up 8%. This is a large EPC contractor, 14-16 or so on Ahluwalia Contractors. Shakti Pumps had a bit of a, basically pulled back 2%. It's been a one-way rocket move on Shakti Pumps. It's up another 5% this morning. There is Mahindra Life. I think we did mention it, 5%. They've got some projects to redevelop societies here in Mumbai. And redevelopment, the company, whenever they've appeared on the channel, has spoken about redevelopment as a big opportunity and they're working towards it. What else? There is KDDL, which is up 6%. And I'll have to go down the list. Valchand Nagar is up about 1.25%. Kaya, which was a big mover. Kaya is up another 10%. So that news flow with regards to Marico came through. The stock was limit up 10% yesterday, and Kaya is up another 10% right now. Look at the volumes, about 200,000 shares done on this one already. So that's, a bunch of other names which are moving around. On the downside, it's the banking updates, right? I mean, which I think Sonia and Nigel have spoken about. HDFC Bank is down a full 3% after yesterday's 2% pullback. So, that MSCI suffers all is just that one day and then it's gone. RBL is down about 4%, 255 or so on RBL Bank. Bandhan Bank is down 2%. Honasa had a 14-15% move yesterday, and Honasa is starting about 2% lower. Another one of those huge movers, recent movers, has been, if you can have the name up, is Solar Industries. Solar Industries, one-way move. It's coming off about 1.7% lower. There is Policy Bazaar, which is down 1.25%. Med Plus is another one. I think I saw a note from, was there an article which basically talked about, challenges Med Plus is facing. 1.5 or 1.6% lower. 679 is where Med Plus is now trading at. So more on this, but no volumes right now. Andrew Holland is with us, Chief Executive Officer, Avendus Alternate Strategies. Andrew, great to have you with us here back in the program. Thanks for your time. Nifty, by the way, is down 3 digits, 100 points. Just your thoughts on banks first, Andrew. A lot of excitement around that HDFC MSCI bid, but then since then we've given back that day's gains and then some. Your thoughts on not just HDFC Bank but large cap banks?
No, we still like them, Prashant. I mean, there's no doubt that some of the woes that we're seeing from certain banks are not reflective of the overall kind of banking sector. And I still think, we got some we got some jobs data out of the US tonight, which if, is more favorable, again, we'll kind of have markets thinking about interest rate cuts. And I think, that's where I still think the banking sector has to benefit from lower bond yields in India, after the inclusion in the JP Morgan index. So I'm still bullish. I think it's had a great run over the past 3-4 weeks, hasn't it? So, a bit of news, you get your opportunity to buy some of the better banks would be my view at the moment. So I'm not so worried about this, but I think it's probably just taken the shine off the sector in the very short term after a fabulous run. So nothing to worry about. I still think the banking sector is going to lead the market higher.
Okay, the banking sector is going to lead the markets higher. By the way, it's 100 points lower now on the Nifty. It seems to be par for the course considering we've had such a big run in the last 6 months or so. A little bit of coming off, won't hurt anyone. And it's HDFC Bank that's really bearing the brunt of it this morning. Andrew, hi, good morning. How are you feeling about the market now? We have a big event upon us, which is the union budget. And this time looks like the government has some legroom for some populist measures, right? Given the kind of tax collections we've had, the RBI dividend as well. So maybe that's what the street is factoring in as well, some positives over there. But how are you feeling about it from a market perspective? What are the 2 or 3 things that you're watching out for?
So I think the market's factoring in all positives, right, in terms of government capex, the fact that, they do have that wiggle room in terms of the deficit. Given the RBI dividend to put more money towards the rural economy, whether that's in affordable housing or elsewhere, we'll have to wait and see. So I think that in the run-up to the budget, you might see other sectors, such as the consumer sectors and kind of, those which would be beneficiaries of any kind of move towards affordable housing like paints and steel and so forth, that those sectors could help propel the market higher, along with the banks and the IT sector. So that's my view. Thereafter, a lot will depend on if there's any tinkering around with capital gains tax, because as the market's saying, no, that's not going to happen now. I'm not so sure that would be the case, but let's see.
Hi, Andrew. Good morning. Before we get to markets, who's the favorite for Euro?
Well, I've just come back from Germany and unfortunately having watched England play dismally. I'd love to say England, but it looks more like Spain to me.
Spain to you, all right. I'll go with the Dutch. I don't think they've won anything for the last 40 years. So continue my losing streak. But let's see. I think England has its chances to get at least to the final 4. Talking about markets, Andrew, what about the telecom space? We were anticipating price increases. They have come about. Stocks rallied in anticipation, and today some various articles are indicating maybe Jio's IPO could be around the corner as well. How do you view this space?
No, I like this space. I like the telecom sector. I think it's been in the doldrums for a very long time. And I think, with the increases that we've seen and what you just mentioned about a potential IPO, I think all the stocks within this sector will see very, very strong gains over the next 6 to 12 months. So I think this is a sector which has been kind of not out of favor, but not loved very much by the market. And I think now the growth potential is going to start coming back. And I think we'll see a lot more brokers getting more positive about not just the earnings growth, but share price targets as well.
Okay. Also on consumption, right? Overall FMCG consumption. Now that the expectation is that the monsoons will pick up as we head into the latter part, July and August, there are a lot of these rural plays that are coming back in a big way. I mean, this morning you have HUL, Britannia that are up in the green. Hero MotoCorp has come back in a big way. Tractors, there's an expectation that things will pick up. Is this a theme that you like, or do you choose to stay away?
I think it's a short-term theme that I would like to play ahead of the budget, but I'm not sure that it kind of translates so quickly into kind of earnings growth for these companies. So maybe tractors a little bit quicker, but certainly for the likes of some of the larger FMCG companies, it doesn't move the needle so quickly. It will take time to happen. So that's why I'd rather kind of be maybe short-term position, more long in consumer stocks, FMCG stocks ahead of the budget. But if I was to put a bet, I would have IT as my kind of, where I think earnings are bottomed out, and the likelihood of growth starting to pick up in the second half of this calendar year will start to play through as well, as interest rates start to fall in the US as well.
Just a word, Andrew, on any of these defense names you own in your portfolio?
We don't, but it's a sector which will continue to do well. The government's going to be spending money on defense, renewables, power. It's not going to go away for us for many, many years, Prashant. So, in terms of for investors, it's a great sector to be involved in.
I just want to put up this Shilpa Medicare. We should put the stock up. It was up 5-6% at open. It's up 14% now. So that's a significant news flow, actually, which came through yesterday, post-market hours. They disclosed to exchanges with regards to, I think, an approval that they've got, and then they've got some licensing revenue coming through with a large US company placing an order. We'll try and have the company on the program and ask them about it, but 660 now on Shilpa Medicare, almost. So that's a big mover. Pharma, Andrew, anything you like there? That's again another sort of sector which comes up quite often when one speaks with investors, etc.
Yeah, again, it's been an unloved sector. It's something that we're not really focused in on. I think IT is where we think that they will get more gains in the kind of next 6 months than pharma from where we are today.
IT will see more gains than pharma. Okay, that's interesting. But do you see any reason, Andrew, for this market to correct? We haven't had a correction for very, very long, right? Forget about a bear market. There's not even been a 15% correction, something that you generally get to see every year. Do you think there are reasons to believe that we are headed into some sort of a correction in the next, 6 to 12 months?
Yeah, I mean, we've been looking at all the negatives, not just for India, but globally as well, which have a very short-term, negative impact, and nothing's pushing the markets down significantly at this stage. So, not just in India, but globally, a lot of funds have been sitting on cash and they're just having to deploy. There's a narrative that, in the US now, if Trump gets in, that, it's going to be good for equity markets, bad for bond markets. So, that's another factor you have to play. So, money's going into equities. So at the moment, I could give you a whole host of negatives, but it's just not playing out in the market. Something will trigger, it always does. But whether it's that big correction, I'm not sure. For India, Obviously, anything in the budget which would be, more market unfriendly, such as capital gains tax, could have that impact very short term.
So just a quick word, Andrew. What do you own? What do you long on? And what are you short on? I mean, we can talk names, maybe you can give us a flavor of where you're at sector-wise.
Sector-wise, we're kind of more long on the overall financial sector, along with consumer FMCG, and we're kind of I say hedging that really with some of the metal stocks.
Okay, all right, Andrew. Wishing you a good day ahead and all the best with regard to England's game tomorrow. I think and tomorrow evening.
I think there's one tonight and then there's one tomorrow.
Yeah, there are two tonight and two tomorrow. So England plays tomorrow and the Netherlands plays at midnight. So let's see. Hopefully, by the next time we chat, England could be champions. We hope.
Okay. That's so Nigel. Thank you.
All right. Well, let's move on then. Let's talk about Sheila Foam. That is the first management on the show. The stock has slipped close to around 90% odd in this year so far. To discuss demand trends, how is exports, how is that inorganic growth shaping up, we have with us Rahul Gautam, the CMD of Sheila Foam, who joins us on the show. Hi, good morning, Rahul. Thanks a lot for joining in. Well, first up, let's talk about the volume growth targets for the year. I think for the last year, you did roughly around 7% odd, and you had value growth of close to around 20%. For this year, how is the trend so far in terms of demand, and what could you guide us on the volume and value front?
Thank you. Thank you very much for inviting me. This year, although we are in a bit of a period where one shouldn't be talking too much about the projections, but we are looking at close to 10% as a volume growth and close to about between 10 to 15% as a value growth.
So then you're guiding for around a 20-25% growth for the year in revenue terms?
I think it will be something between 15 to 20. I mean, things really do not work out exactly like that. The volume growth is there, but sometimes the average selling prices are a bit lower, and therefore what comes out as a final number is something around 15-16%.
All right, and this includes an inorganic growth that you've done?
Not really. It does not include that.
Doesn't include that.
Because Kurlon has a history of its own, so that would be just an addition on top of that. It does not include.
Okay, got it. So, Mr. Gautam, good morning. So, 10% volume growth and 15 to 20% revenue growth is what you're looking at. Got it. I wanted an outlook on what's happening with the Spain and the Australia businesses, because I was going through the numbers there. In FY24, you've seen a degrowth in your revenues in Spain. Margins have also fallen. Even Australia has seen a degrowth. So, will exports continue to be under pressure, and how long do you think it would take for growth to come back?
So first, let me just say that these are not exports, but these are manufactured in those countries. The very nature of our business is that we can't export. It's very voluminous items. Let me first talk about Spain. Spain is we have a very small market share in a very large European Union market. Though the markets are shrinking and contracting there, but we are continuing to grow. Last year, we did see a drop in the top line, and that was primarily on account of the raw material prices coming down. They had come down, and therefore that was the impact. On a quantum basis or a volume basis, we still did well. And let me just say a couple of months which have gone by as far as this year is concerned, it's on track. It's growing.
So earlier for the US market, you had said that it could be 100 crore revenue run rate market for you. Are you on track to do that?
No, that is one thing that I must put forward, and that is on account of the US suddenly putting up very huge anti-dumping duties, and that they did not only from India but from almost all over the world. So that market, which started off, or those supplies which started from China, then came to India, a little bit in Europe, and then to the other parts of the North American market, are now getting concentrated in the US only. So I think it's clearly the intent of US to bring that manufacturing back there. Will we be able to do too much about it? Probably not. There would be a few containers which will kind of continue, which may be a little bit on a value-added products, but that bulk export to the US would be under challenge.
Have you guys have you been in the market for a mattress lately? Have you looked around? I mean, it's incredible. I mean, you know, it's there's the amount of technology now, which at least is advertised, right? They can cool cool your sleep. I don't know how they do it.
Wow.
There's I think all kinds of adjustable stuff. You know, maybe the only thing they don't do maybe is sing you a lullaby or something.
Maybe there's that will come soon. There'll be a small speaker next to your mattress.
But you know, on a serious note, Mr. Gautam, there's so much innovation, right, all across, and that actually goes to the point about the premium end, which has been doing well, which is where bulk of the thrust is really. So how is that shaping up? Because, you know, in that premium end, there is a lot of competition as well. I've asked you this before as well. You can see it on advertisements we see on television. How is that shaping up, that, you know, sort of top end, which I'm assuming is also where you make maximum margins?
That is true. We make maximum margins, and it is also true that the growth rates are the best out there. But the base is so small, extremely small, that it will take a while before they begin to make any kind of significant impact on the top line or the bottom line. But they definitely show the trend, and we are well on that journey part of it. You're quite right on saying that the innovations are a galore. You know, I mean, you can you talked about the cool mattress and those kind of things, or mattresses. I know you talked about lullaby songs, etc. But all that is possible, and the contoured mattress, you know, which can sort of be even programmed to sort of change in the night when you get into a deeper sleep. All those things are there, but the bulk is where just the price and good value for money is to be looked at.
At what rate is this premium end growing? It's very small, as you said, but is it growing at a fast clip or not really?
Very, very, very fast. You could look 50 to 60% per annum. You know.
Wow.
It's a large number, but the base is extremely small.
And for you, how much is this as a percentage of, say, EBITDA? Because, I mean, the margins are higher here.
Yeah, but as I said, the impact on the top line, bottom line is very, very abysmal.
Very, very small.
It might be closer to one. Yeah, but it's growing fast. And as I said, they may not be contributing at the moment, but they're definitely showing the trend.
And when we say premium here, what's the price point?
So when you say premium, it's about 20,000 rupees for a mattress, for a single mattress.
Okay, 20 plus.
Oh, okay, all right. Let's, Mr. Gautam, let's look at a couple of other aspects then. The inorganic growth that you did on Kurlon. Could you tell us how's the integration progressing? I recall you telling us that, in fact, you know, these margins are likely to tick up from what they were. I think they were in high single digits, 7-8% odd. So what is the run rate, annual run rate that you're looking at, say, for this year from this acquisition? And will the margin trajectory gradually improve from this year itself?
So as far as the integration is concerned, primarily two parts to it. One is the back end part of it, which would, the consolidation there would really bring about the increase in the bottom line and in the margins. So what was hovering more around 7-8%, we expect that to go up to between 10 and 11%. And that integration has done well. Although we are not yet a year away from the transaction, and we are beginning to see those numbers in the bottom line. It's the front end which is taking more time, which will add to the top line, and you know, that's because there are people, there are set systems, there are set policies, two completely different organizations competing against each other, and to integrate the distribution and the dealership, and eventually reaching out to the consumer. But all this is happening. We've taken a target of 1 year for ourselves. We did the transaction in middle of October last year. So by October, all these things should settle down. But the back end has, and the bottom line has.
Okay, all right. Final question, Mr. Gautam, before we let you go. You know, we've got a fair bit of an idea on your business, but we also get an insight into other prices like TDI prices, as well as you know, a couple of other input costs. Could you tell us how the trends were, particularly of TDI in the first quarter if you compare it with quarter 4, and how do you see it panning out going ahead?
Very steady and probably at the right level when you look at the consumers as well as the producers of TDI. So hovering around 200 rupees a kilo. Little bit of fluctuations of some plus minus 7-8 rupees that goes on. So recently, just about 3 days back, went up by 7 rupees, but a few days back it had gone down by 5 rupees. But it's at a steady level of 200. It was the polyol which was creating a little more problems for us. There was an anti-dumping duty which was about to be levied, but to the best of our understanding, and those 90 days for the finance ministry are over, that it's not coming. And I think that's a big relief for the sector.
All right, we'll leave it there, sir. Thank you very much for joining us. Great speaking with you as always. Good conversation. And we'll talk again. Well, we're down 80 points, 90 actually, so 24,219 on the Nifty. So it's a little bit of recovery from the opening levels, but not much. We will connect with the management of Ixigo. We'll have the CMD and you know, the group co-CEO joining in at the company. It's a recent listing, and stock's done well since then from the issue price. So Alok Bajpai and Rajnish Kumar on the other side. Stay tuned.
Welcome back. Well, let's put focus on Ixigo now. This is the first quarterly performance of Ixigo since its listing. It is also known as Le Travenues Technology. So remember, it listed on the 18th of June. The issue price was 93 rupees. The stock is at 164 right now, so it's done pretty well. And travel and tourism is a space that has just been booming, right? So they're in the right place at the right time, perhaps. The platform reported a 20% revenue growth versus an industry growth of 18%. We have the company's MD and Group CEO, Alok Bajpai, the Chairman and Director and Group co-CEO, Rajnish Kumar is also with us. Rajnish and Alok, thank you so much for joining us and taking the time out to speak to CNBC TV18. It's been a great listing for you folks and good growth, right sector, right time. But I want to ask you about the way forward, right? Rajnish, let me begin with you. What kind of growth are you projecting? I mean, you have been growing faster than the industry for a while, but is this 20-25% growth something that is sustainable over the next couple of years?
I mean, I think more than the growth, I think what I would like to comment about is the fact that the reason why we have been growing incrementally year over year is because inherently because of the ability to monetize from the large captive user base that we have, and the amount of innovations that we have done on the ancillary and value-added services side, and the ability to better cross-sell and upsell within our ecosystem. So remember that we made two amazing acquisitions in the form of Abhibus and Confirm Ticket, and those two apps were completely focused on trains and buses respectively. However, they have very large captive audience as well, and our synergies on flights and hotel side, we are trying to get those products rolled out on those platforms as well efficiently, and this ability to monetize internally within our ecosystem of apps and our captive user base is what is resulting in this in most of the growth that we have. On the flight side, I think it's important to see that although the market has been growing very sluggishly because of the ecosystem level constraints, capacity constraints, and because of that, airfares have been fairly high. You would have seen last couple of quarters have seen like just single digit YOY growth. However, our growth has been pretty good thanks to the product innovations that we have made, and we are like focusing on cross-selling and upselling from the tier 2, tier 3 audience that we have. Like we did almost like 480 million annual active users in FY24. So that ability to cross-sell and upsell flights from those tier 2, 3 cities where airports have come up recently, is one of the reasons, and the other is product innovations. So in the form of products like web check, etc., that we have created, and also the ability to keep innovating on products, ancillary products like Assured and Assured Flex, which continue to see great uptick on flights business as well.
Got it. I just wanted some numbers if you can share with us. So across your verticals, right, flight, train, bus, do you think this growth, I mean, in flight, you've seen a 30% growth in Q4, for example, on the top line. Is it something that you can hold on to? Because there's plenty of competition now in this space as well. There is a lot of price competitiveness that is picked up in this space too. So in flight, you've seen about 30% growth. Train has been about 18%. Bus has been 24%. Are these run rates that you can sustain in FY25?
So let me take that very quickly. So one thing we want to highlight here is that look at the passenger segment level on the flight side. We've grown almost 77% year on year, right? And even if you look at for the quarter, we grew at almost 42%. In fact, for the quarter, the growth in the overall market was in single digits, like Rajneesh highlighted. Now, our strategy on that side is very clear that we are willing to let go some operating leverage, if it comes at the cost of having slightly lower percentage contribution margin, we are okay with that. Because we believe that there is a large underserved market where tier 2, 3 airports are coming up and where a lot of train users are migrating into flights. And we can become the first port of call for people from tier 2, 3 towns who actually start flying. And therefore, it's an unprecedented opportunity in this market at this point of time to go and capture more market share, which is coming from new flyers, right? So I think our strategy will be to incentivize new bookers, spend on performance and brand, and make sure that we capture market share on the flight side and continue growing faster than the market there. Whereas on the train side, overall market is again not growing that fast, right? I mean, there's a single digit percentage capacity growth. So again, there we are growing much faster than the market. And we think that low to mid teens kind of growth on trains for next few years is something that we are looking at. On the bus side, look, again, it's an under-penetrated market. Less than 20% of bus bookings get done online. And we are the second largest player, but we are also one of the fastest growing ones there. So if we are able to just maintain slightly better growth than the market, I think we should have a right to continue growing this way. But what I would guide is this year, overall market is going to grow slower. Overall OTA market is going to grow slower than it was growing year for these capacity constraint reasons across flight and train.
Okay. Gentlemen, good morning. Great to have both of you here. Prashant this side. Alok, just to get one number out of the way. So we've got some analysts making estimates for the full year FY25. You did 656 crores in revenues in FY24. Can you do north of 800 crores for the full year this year? I'm not asking for a specific number.
Look, I think our endeavor will be to grow faster than the overall market on the OTA side. That's how we would love to guide.
800 plus? I'm sorry to,
I think we've been given, we've just entered the public markets. We don't want to give any hard guidance at this point. We would want to just say that our endeavor will be to grow fast. Our endeavor will be to let go some contribution margin on categories like flights and buses in order to achieve faster growth. But again, we don't want to do it at the cost of bottom line either.
Okay, got it. So then, but I think margins then, I mean, as you build it out, as you said, right? So many first-time flyers. and as you try and capture, because established players already have, you're kind of used to an app or to book your travel, but you've got a lot of first-time buyers coming through, and you'd want to go after them. And you said you'd be willing to go give up on some contribution margin. So as you build this out and you scale in that segment, should we assume margins perhaps will be a little weaker for the foreseeable future? Not weaker, but I'm saying, what would it be at? I mean, if you can give us a number, that'll be great.
Yes, at a percentage contribution margin level, what we are saying is that we would be willing to live with lesser than where we are at on flights and buses. At an absolute total contribution margin, which is, if you look at even FY24 versus FY23, our total contribution margin kept growing quite rapidly, 35%, close to 34.7% growth. And for the quarter, about an 8% growth. So I think we would want to keep expanding our total contribution margin. That is clearly something we don't want to let go of. But again, if we have to let go a few percentage points on flight and bus in order to grow faster, we won't be shy of doing that.
All right. Hi, gentlemen. Just a couple of quick questions before we let you go. What's the expected share of revenue from hotels?
I think it's too early to comment on hotels as of now, because like we said, it's been I think even the last call we mentioned that it's been like barely 6 months, right, since we launched hotels. So
no, I'm asking you for in the next few years, you'll have a target, right? As of now, it's very, very small. But scaling up of that is something that you'll have briefly mentioned as well. So if you could tell us, say in the next 4 or 5 years, where does it move to?
Absolutely. So, we are extremely satisfied with the growth that we are seeing on hotels. I mean, we are almost seeing double-digit growth, month on month. But like it's a very small base that we're looking at right now, right? Because this is very early days. Right now, our focus is, the good thing about this growth is that this growth is not coming from external user acquisition. We are not using any external marketing channel or, spending money to acquire users to grow hotels. What is happening is that because of this massive distribution that is inbuilt in our app ecosystem, 480 million annual active users. So this captive user base is where we are trying to cross-sell and upsell to on the hotel side. And that growth is coming entirely because of that. So over a period of time, you can see that as people get exposed to this product more and more, I think this crossover of people among these MAUs who are exposed to hotels as a product will keep on significantly increasing. Right? And obviously, we want this to be one of the most significant verticals for us going forward in the next few years. And that's the whole point, right? Because we know that the monetization is better, stronger. There are better take rates in hotels. And so we would continue our endeavors to create a stronger product market fit there and also build out very deep supply over the next year or so in order to get to those numbers.
Okay, one final question then. You have a budget for some inorganic acquisitions. Anything that you have, sort of narrowed in on for the year? Alok, that question is to you.
Well, see, we keep meeting interesting teams and interesting companies that can either, complement an existing vertical or help us add a new vertical. At this point, we don't have any definitive thing in mind. But like I said, as and when we will have something more definitive, we will share with the markets.
All right, we leave it there, gentlemen. Great speaking with you, and we'll talk again, I'm sure, soon. Thank you very much, both of you, Alok and Rajneesh. Good luck to both of you and the team at ixigo. Let's shift focus to the industrials space now. We have Jefferies investor feedback, which is suggesting that budget 2024 will be closely watched. They don't see a material sort of deviation from the capex spend that we've seen over the last couple of years from the government of India. We have Lavina Quadras. She's managing director of research, capital goods, utilities and logistics at Jefferies, joining us now. Great to have you with us here, Lavina. Good morning. Prashant this side. Let me just get this, what you put out on the 4th of June. You said, well, as far as industrials are concerned, you're essentially the advice is be selective, power and defense stand out, and these should do well. So, just to begin with, before we dive into details in terms of your thinking, etc., what do you like in these two spaces, power and defense, Lavina?
So good morning, everyone. Firstly, I will not be able to comment on specific stocks. But just coming to the broader theme, right? What we believe is that the power deficit is here to stay. We believe that FY24 to 30, the power sector as a whole will see the strongest growth. We're also positive on the defense side. See, in defense, one of the things we highlighted in our note was it's not really an increase in the budget spend, but essentially what is happening in defense is the whole focus on domestic manufacturing, import substitution. So that should continue. And defense exports, as far as that is concerned, that could provide an additional leg of upside to companies in the sector. So net, we believe that the capex focus of the government will continue, though the budget will be an important indicator as to directionally how much that focus remains.
Right. I mean, we are one of the biggest, actually, we are the largest importer, right? Defense importer in the world, I think. And if you try and make more and more of what we import locally, I mean, of course, the runway is going to be very large. The opportunity could be very large, of course, over a long period of time. But what are stocks pricing in, without naming names, Lavina? Is there a long runway here for stocks as well, or a lot of it is in the price?
So I do think that there is still a lot of runway left. So again, like I mentioned, I can't comment on stocks specifically, but just on the broader theme, right? One of the things we'd even put out in our report is India is still one of the largest importers, and essentially domestic manufacturing and import substitution should continue, which means that companies should have a runway of double-digit growth ahead for, again, at least the next 4 to 5 years. So let's say within the broader capex theme, right, defense stocks, and power equipment related stocks should be the biggest beneficiaries, of this trend and focus that the government has. See, for me, defense exports is a very interesting area as well. So while it's being discussed, larger orders are yet to come for the companies. So that could give you an additional leg of upside, again, over the next 4 to 5 years.
Okay. So the order inflow for most of the industrial stocks, right, in FY24 went up about 35% year on year. Keeping the budget aside, just purely in terms of order inflows, what is the expectation? Do you think FY25 can be a better year compared to FY24?
So what you need to bear in mind, again, coming to what probably stocks are pricing in, right? For me, as long as double-digit growth continues on the order flow side, and it may be lower year on year because you did have, let's say in 21-22, there was some COVID impact on the ordering, right? Which has reflected in base effect, and therefore you've had stronger growth probably in 23 and 24 when the cycle has just started. But so growth year on year might be directionally lower, but it will not matter as long as it is in double digits, because what will end up happening is there's still a lot of operating leverage left in the system. So essentially on double-digit top-line growth, you still have potential of earning surprises ahead for the next 18 to 24 months. So again, I mean, if you're present in the stock, which is, where the end client is in the right sector, you still have more runway for both growth as well as share price upside.
All right. Hi, Lavina. Good morning and good to see you in. Thanks a lot for joining in on the show. Well, I wanted to ask you about the industrial space. There's a bit of a re-rating that's taken place out there, but particularly PSU industrials. They have narrowed that gap with the non-PSUs. I think it used to be around 35-40%. That's come down to, I think, around 10% in terms of PE. Do you think the PSU industrials have run ahead of themselves?
Morning. So for me, again, without coming into stock names, the idea is there are some PSUs which are actually showing very, very good growth prospects, right? They've seen upgrades in earnings over the last 18-24 months. So for me, this run-up and this re-rating, a lot of it is based on and contingent on earnings upgrades continuing. So for me, again, even, PSU, definitely the gap has narrowed down with the private sector. But if the PSUs continue to surprise on earnings, and for example, in power companies, if they surprise on capacity addition, and if their industry bid pipeline is rising, you should continue to see upside in these names, even from current levels.
Lavina, when I'm looking at your recommendations and where your target prices are, right? I'm looking at HAL, BEL, defense first, and maybe you can throw in L&T as well because they have a defense business. You said many years of 20% kind of growth possible here. The targets are around where the prices are. I mean, the prices are moving up so fast. So just what are your thoughts here? I mean, is it, how do you reconcile both?
No, so what will happen is we will wait for earnings season. We will review at that point in time. So in that sense, we'll have a look at target prices. But just in terms of directional, right? Like I was mentioning, you still have a lot of runway for growth ahead.
In power, because there are utilities, there are power equipment companies, space areas like transformers, etc. Power financiers, a lot of the financing needs will be met by Indian entities. What's the best way to play this theme? Because there is a lot of capacity addition which needs to happen without naming names again.
Again, the note that you were referring to, right? One of the things we highlighted over there is industrials, if you think about it, is fairly well owned. A lot of investors, both globally and in India, own industrials. I'm not saying they don't own power, but the broader sense we got was that, from investors is power, as far as ownership is concerned, there is still probably some way to go. And if you ask me if you're in the right names, right, I think you should be owning the asset owners as well, which are companies that will execute. The way to look at asset owners or the power companies is that their earnings growth should mirror their execution growth. So if one believes that power deficit is here to stay on the peak level and government focus on power capex continues, those companies that actually execute and increase their asset base are the ones which will see the higher earnings growth. So for me, I think you should be present in all the legs, right? You should own the asset owners, you should own your industrial names as well. Finances, I don't cover, so I'd not be able to comment over there. But just within, I would want to be present in both the asset owners as well as the equipment vendors.
Some of your coverage, of course, also it does sort of take into account the renewables opportunity, right? I mean, companies like NTPC, etc., also, of course, are executing on the renewable side in a big way. Are you positive on that space? Because there are individual companies, smaller companies, which, of course, you guys don't have coverage on, which have done very well. So just your thoughts there. And when you talk renewables, what are you most sort of constructive on? Solar, wind?
So one of the things we mentioned in our piece, right, we're looking forward to power sector as a whole, seeing the highest growth capex, CAGR, let's say, within all the capex subsegments within India, right? And the idea there is renewable will definitely be a very big driver. So again, in our own assumptions, we have renewable energy. We believe industry level, the renewable energy capacity is likely to rise more than 3 times. So for me, again, you will have beneficiaries on the asset owner side. And of course, on the equipment chain, India is looking, to backward integrate. You have larger corporates that have discussed plans in solar module manufacturing and even to backward integrate within there, right? So clearly you will have chain beneficiaries as well, including the smaller ones. And like I mentioned, even growth for them has a fairly long runway of double-digit growth, at least for the next 4 to 5 years, keeping in mind that, this peak deficit should continue. So for me, as long as power demand is growing at 7% and above, the story is very much intact.
Okay, before we let you go, Lavina, the big event upon us, the union budget. From your sector point of view, what are the key expectations?
So see, as far as the interim budget was concerned, 16% year-on-year was the capex growth approximately. So we're looking forward to this staying in double digits, and the capex focus, the government capex focus on the budget, in the budget continuing.
All right, Lavina, we'll leave it there. Great conversation, and I hope we can do this more often. Appreciate you joining us here on CNBC-TV18. Thanks indeed. Well, 100 points lower on the Nifty. We're at about 24,190. We'll take a quick commercial break here. We'll come back, and it's time for Manisha to talk about commodities and what's top of mind there. Stay tuned. That's coming up.
Welcome back. Well, Mitesh Thakkar is joining in. The market's not looking that good today. A little bit of profit taking is what you're seeing. About 100 points lower now on the Nifty. Mitesh, this has, of course, derailed that, move that we've seen in the last couple of days. But be that as it may, what's the view for the rest of the day and what are the stocks to watch?
Yeah. So I think, we were talking about this, that today there's a good chance of us seeing some kind of a pullback with the overbought levels and our lead indicators turning down, and we talked about 24, 150, 100 as the zone to look at. So I think we're still maintaining that view. If we start breaking to 24, 100, then I think we might even look at going short on on stocks as well as index. So that's the kind of idea. And on the stock side, I think, I have a mix of a buy and a sell. On the buying side is Berger Paints with a stop at 508 and look for a target of around 535 over here. While on the selling side is Chola Finance. It's a conditional sell. I'm waiting for the stock to break this 1395 pivot and then go short with the stop at 1420 for target of 1340.
Okay, all right. Got that. By the way, some of these, we were talking with Lavina about power and that space is moving up once again. Look at REC. It's, I think, at the high point of the day. PFC, I think, should also be doing well. And of course, there's the equipment companies, etc., which we've highlighted. Let's shift focus to commodities and what's happening there. Manisha is here with what's top of mind in the commodity space. Manisha.
Well, thank you for that, Prashant. It has been a great week for most of the commodities, and even as we're looking at some consolidation right now on Friday, but we are headed for a weekly gain across sectors. So whether it's precious metals, industrial metals, energy, everything really has bounced back quite strongly in the first week of July here. So the dollar index has declined below 105 is how we saw it trading early in Asia, and the decline in US Treasury yields also has been a supportive factors. The markets also have seen weak US economic data, and that has bolstered the bets of a rate cut going forward. So whether it was about ISM manufacturing numbers, services, jobless claims, all of that has been on the bearish side. So the probability of a rate cut has increased for the month of September, still less than 75, and the markets are hoping that once it crosses 80 to 85 is when you will see an impact and a reaction come in for asset classes. The street is also awaiting the China stimulus expected ahead of the third prelim meeting in the month of July itself. So ahead of that, we've seen many of these commodity prices actually gain up. So when you look at the crude oil prices, we're trading at a 2-month highs. The prices have gained up by 4% in this week, and crude is headed for a fourth weekly gain onto that one. If you look at the base metal prices, well, tin is trading at a 1-month highs. There are supply concerns coming in from Indonesia and Myanmar supporting prices. Also, when you look at the other base metal prices, you have platinum now trading at a 1-month highs, back above $1,000 an ounce onto this one. Copper is trading on a higher note as well. For platinum especially, it is about deficit of around 6% for this year. That seems to be really supporting markets. And then the EV demand is coming back as well. But moving on to copper, and that one is trading at a 2-week highs. We've seen prices gain back above $9,600 a ton there. Take a look at gold prices, 2-week highs on that. Silver is trading at around 2-week highs also. Iron ore price is trading at a 1-month highs as well. So it's been a strong comeback after the decline in June that the month of July seems to be providing to many of these commodities. My last chart is about what we've done in sense of percentage point in this week. So as you can see, it has been a 3.5% gain for crude. Gold and silver is gained between 2 to 5% as well. And most of the metal prices also have gained anywhere between 2 to 5%. So whether it's copper, iron ore, tin, zinc, it has been a great week.
All right, Manisha, thanks very much. By the way, later today, you got another trigger, right? The US jobs data. And if that number is weak and you have a sell-off in dollar, which has been looking a little precarious, I mean, come Monday morning, commodity stocks could be could be in for some action once again. Well, Manisha, thanks very much for that. We'll take a quick commercial break here. On the other side, our special segment, Indianomics. We will get you an exclusive chat with Pierre Oliver. He's chief economist at IMF. Stay tuned. That conversation up next.